Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Welcome to this video review here. I'm going to do a quick video review and answer some questions as well. So first of all, something is moving here. The dollar index has confirmed again that 89.10, and it's moving now higher. So what we can anticipate here, it again has respected this wedge here, and as you can see, buyers have a need to buy at higher levels, which is a good indication that this market could continue higher for sure, or highly probable, because nothing is sure in the market. We could see now a test of this 90-30, 90-20 area. Okay, so we are seeing obviously a behavior on the majors. We're going to talk about that, but before I get there, I just want to comment on. I saw we had a few comments in the room here. Let me look at that in relation to the SP 500. So we have to be very careful here. The SP 500 actually it has traded the short here. At least it's respecting that short. That's the full 50% house highs to lows. We know that this market is in a range, and I was looking for higher prices, but that's what we're getting at the moment. The market keeps being trapped within this area here, and will oscillate among this between these two areas until one or the other is respected. So at the moment, the 2708 is being respected. This is one of the FibStalker levels. We also saw here on the 4-hour time frame that the extension long has pierced. Therefore, as this full trend has now failed, we are going to look at a 50% retrace for the first area to test longs. Okay, and that 50% kind of lines up with, not really, but it's within this area that of participation, really at the bottom of it. So we'll see what happens here. So for longs, be very careful here at the moment. All right, so the majors here obviously are actually feeling what's going on in the dollar, and we are all very dissatisfied with the kind of behavior we have been seeing um, in this market here, and um, I'm talking about the uh, the euro here, which has been moving largely now for several weeks. That's not conductive to good trading using the FibStalker methods on the daily. So we always have to go on the smaller time frame, and I personally don't like to identify opportunity on the smaller time frame. But there are other markets we could follow. What is important here is that this market could now possibly, if the dollar index continues higher, go and retest the bottom of this range, which is 121.62. Okay, and then after that we will see whether the market is going to continue higher or it will continue moving laterally here. Euro dollar activity very dissatisfying. The pound versus US dollar has pierced the next measure move higher. You remember that since the last weekly bottom here, this market had traded a 50%, which were priced into first target, and the next measure move started finding participation yesterday and eventually failed on dollar strength here. Okay, so this is an important development. So we have now the bottom of the channel as well as the 50%. Sorry, the bottom of the sideways move here. So this 50%, I don't have a lot of it could get a bounce, but I don't think that this area is going to hold now. US dollar Canadian dollar is trading after news yesterday, is trading into the next measure move. Remember, this market has long and short, and the short has been defended recently. So this market could be testing now the next measure move. This market had extension short to first and second target and well below that, and now it's testing the lows to lows here. Yesterday that level was not tested, today is being tested, and we will see whether this is going to hold and keep pushing price lower. That's for sure the anticipation that we have for one of the other markets, which is the Euro Canadian dollar. Let's review it now. Also because there were some questions in the room in relation to this market here. Now, what we see here is a market that has pierced the 61% level here, and although it might respond to longs in the short term, the long is not it's the counter trend move at the moment. Okay, so you are trading against the trend at the moment. Of course, this market could continue higher. The point is, at some point, the actual trend will resume, and the actual trend is down. Okay, so in here, this market now has traded, and is actually has traded yesterday the extension short here. Anchor low here has traded to the first target. Next measure move has traded yesterday. Okay, that's one of the reasons that it's adding to a continuation. Of course, this price can do anything, can retest this level, can either break this area. The point for me is that I'm not going to look at smaller time frames in these conditions, because I know that by the 55.95 level being pierced, I know that now the path of least resistance for this market is down. So I'm not going to go and trade higher, because we don't know where this market can stop. Actually, we had already participation short at a previous level there, and that could be retested and keep pushing price lower. So, or this market could just continue lower from here. In fact, the 4-hour time frame has a long and short at the moment, and the short is still being defended. It doesn't mean that it will hold, but nevertheless, I'm not interested in longs in this market, because they are against the larger trend. Okay, so US dollar Swiss franc, we saw a very technical market, and this market has traded a series of 350%. The third one has hit and overcame the second target here, and it's now with the strength in the dollar index, has the potential to move higher into the 97.82. That's where we could see this market move into. So the first target participation here, first target hit, second target is just above here, and if that trades, then we're going to capture the continuation in this market with extensions. Okay, so we know what to do in this market, and as anticipated, because this is a range, you know, the 50% here has just broke, and we kind of anticipated that, because this market is moving in a very large range, and usually in this range the 50% do not hold. Okay, so next, the US dollar Japanese yen. We don't know whether this market, this market has responded to an extension short. We just don't know whether this market is going to continue to respect that level. Second test, if it happens, is always a dangerous test. This extension short here was tested successfully the first time. We saw participation, risk-free trade, and now this could be retested again. Not sure whether this is going to be retested again. The um, the um, the market here is it's kind of resisting also because of the strength in the dollar index, but if the strength in the Japanese yen resumes, we could see this market following suit and continuing lower as per the setup. New Zealand dollar and New Zealand dollar Japanese yen yesterday setup failed because of the failure in the strength in the dollar index, and we are seeing this market reversing here. So a new test of this extension long here, which held once, twice, three times, four times, seems to be in the cards here, and we will see how this market is going to behave when this level is tested. If the 7180 30 is pierced on the downside, then we are going to see the bottom of the range here. And the bottom of the range in this market is very well defined here, as traded a number of times decisively in April last year, May last year, and again between October and the end of last year. So if this market could actually offer an opportunity, if the 61% level is broken, we could see something very similar to what we saw last year, and that's a good opportunity on the larger time frame as well, to take advantage of this market. Okay, so the I didn't review the Australian dollar US here, which actually went to trade the next measure move in this sequence, with this time testing properly 4 pips of front run, which is what we would actually anticipate. 5 pips are good as well. This level here has traded, pricing to that first target 76.71, and the next measure move in the sequence after the first target was hit was the highs to lows here. It has not traded it at the end of last week, but this Thursday it has, and it went just depending on how you chase that, 78.12, 3 or 4 pips from that level. That makes the level traded, and we are seeing now this market continuing lower, and this market could really move very quickly in the coming days and reach this bottom here and actually continue lower into that first target as well of the new measure move. So very technical markets. You have to have the patience to wait and time them, and that will deliver this market. So we have 75.60 is the level to watch here. Okay, the other markets, I think there was a question on the New Zealand dollar, Canadian dollar here. This market also has pierced the extension long from highs to highs, and so the trend higher here has ended, and we're looking for opportunities to actually trade the continue trading the shorts here, and in here we could use we actually at the very beginning here we had 50% trading before the break. With the break, actually we actually now we are in shorts, and let's look at that sequence again. We had we actually can see that on the daily here as well. Okay, so depending on um, where you trace the sequence of measure moves. Um, so the next measure move here has failed. That's the way I trace the sequence. So the confirmation only came this week. So we will see whether this market is going to offer an opportunity for a short on a larger time frame with a retrace. And if that's the case, we know that this market is now moving back again to the bottom of this range. Okay, the sequence was broken, although didn't happen in correspondence of a level. It happened in correspondence of the previous highs of this range here, and it means that there is no strength from participants to try to push this price higher. All right. So for the other markets, we are seeing gold and silver, of course, responding to um, what's going on in the dollar. Not so much as we would expect here or anticipate in gold. There was only a marginal a move lower here, so we will see how this settles and close. And we saw a strong move higher here in silver, and not sure whether that means anything here, but this market has been very weak for a couple of years here, and now we traded against that 50% and above that 50%, so we still have the 1896 50% long here. At this point, if this trend continues, and that would be very odd if the dollar index also continues moving higher, then we could see the 1896 trade again. Okay. Last but not least, US dollar, Singapore dollar, which is a proxy of the dollar index. We have seen a little bit of strength in this market as well, of course, because you're seeing that in the dollar index. So there is this huge triangle here. So we anticipate a retest of 31.45, whether this is the move that will eventually break this level and put this market decisively into a reversal. It's not given to know. We'll wait and see whether that's the case. Okay, so this is it for this brief intraday review. If you have any questions, let me know. Remember always to trade in the direction of the path of least resistance, which requires that you understand the sequence of measured moves in all the time frames, particularly in the larger time frames, and what is the path of least resistance as well. If you trade against the trend, you can still do that. It's a counter trend trade, but counter trend trade are riskier, and we never know where the market will resume the change in trend. In fact, when we trace our moves, we do not assume that the market will get there, but if the market gets there, then we need to test that. A typical example here is the Australian dollar US dollar. This market has reversed last week on Friday without formally testing this level, and the fact that this level was there, it doesn't mean that will necessarily be tested. Very often it does, but in this case this market could have continued just lower. Okay, it didn't do that. The market came back and actually traded that level, and that's where the bigger participation came. In fact, that participation, because involved also algorithms, was much stronger than the participation we saw the week before. And see how this market and price is continuing. So we anticipate now this market moving very quickly, maybe within the week, to the lows here, and potentially then continuing lower into the first target. So always the perspective is very important. 50% level and area of participation of algorithms are not a levels that attract price. The point of view is different. If price gets there, we need to test those levels for participation. This is it. Signing off, and I'll see you in the room. Bye bye now.